and make no money in your business, but still come out ahead because of the taxes. How does that work? Well, let's say you start a job working for Uber. Let's say you make $1,000 a month every month for the next year, so $12,000. But you're going to have expenses. Now, some of those are going to be expenses directly related for the business. You're going to write off, the mileage for the driving you do, and that's going to reduce your income by something. Let's say that drops it down to $600 a month or a month. Well, but if you spend that money on other things that are business expenses, but were personal expenses, you come out ahead. So the low-hanging fruit are things like you should absolutely be paying for a lot of, or maybe even entirely, your whole cell phone bill if you are doing Uber because you need to use your cell phone for Uber. Well, that's a business expense. Uh, Instead of doing mileage, you might actually do a percentage of the actual real cost of the car. That would include depreciation of the car. That would include insurance. That would include gas. That would include maintenance. Well, you're also in business. Maybe you need a new computer. Buy that computer for your business. Use it for the business. Yeah, even as an Uber, you need a computer, if nothing else, to do the paperwork, to do your taxes for the business. But now you have a computer. Similarly, you can pay for software for that computer, whether it's a one-time fee or an ongoing license, though that software, if you use it for your business, is all of a business expense. And finally, let's say now you're down to you made $3,000 instead of that, $12,000. Well, let's say you want to go to Las Vegas. And so you find some sort of a conference in Las Vegas that's appropriate. And I've looked it up. There are conferences on how to make more money as a rideshare driver in Vegas, multiple of them in the next 3 months. So you go to that conference in Las Vegas. Now your airfare is tax deductible. Your hotel is tax deductible. Half of the meals or half of what you pay on the meals are tax deductible. Oh, and if you don't spend much on meals, you can actually use the per diem instead of what you actually paid. So if you want to be cheap and make all the food yourself in your hotel room, you still get a deduction for the cost of what those meals should have been. And now that vacation, and of course it is a vacation to Las Vegas, is now also tax deductible. And in this way, you made no income, you owe no taxes, but you're obviously better off. You took, five, six, maybe $7,000 of expenses that you had that were money you were paying out of pocket after tax, and now you're paying it before tax. This is why, as Jack has talked about so often, as I've talked about so often, one of the best things you can do to get ahead financially is to start a business, to run a real business, and to figure out how taxes work, because it's really, really easy to make a business making $500 or $1,000 a month, again, doing something like Uber or DoorDash or something like that. And you can use that to pay for things that you're already paying for before tax and come out way ahead. If you're in the combined 25% state and federal tax bracket and you made that $12,000, that's like making $15,000 from your day job instead. It adds up really, really quick.